The market has been in turmoil over the past couple of weeks. If you're wondering what your favorite stocks are going to do this week before Monday even gets here, this video is for you. I'm going to take a look at NVDA, SOFI, PLTR, Tesla, and the SPY, and we're going to take a look at the overall market and see what is going on and what do we expect for Monday. Understanding candlestick patterns and charting is very important, and understanding the direction of the market, supply and demand, support and resistance. We're going to take a look at these things to understand what's actually going on in the market. We're going to talk about what's actually driving the market down and what to expect this week, which is Tuesday, which is the tariff talk. If you want to understand technical analysis, like I'm going to show you in this video, candlestick patterns, charting, supply and demand, support and resistance, and you want to have a better understanding of the proper way to gauge the market and invest, this way you are more successful. I would love to help you. Like my students on the screen, you guys can sign up at investwithcorey.com. Link is in the information box below. It is my goal to help you achieve your financial freedom. So first, we're going to look at Tesla, and we can see that Tesla has sold off, and the 10-day is below the 20-day right here. Orange is the 10-day, blue is the 20-day, and the 100-day is black. When we have the 10-day crossing below the 20, that's a sign of potential bearish scenario, which happened back here. And when they cross the 100-day, that is pretty much entering the territory of where we're working in a downtrend now. The stock is starting to slide. And typically, when stocks head downward in a downtrend, they typically bounce back up, go down again, bounce back up. They're making lower highs and lower lows. You can see that Tesla made a lower low right here and a lower high, and then continued downward, and then it's come back up and it broke above the 200-day very briefly, and then it started to head back down. Now, Tesla right now is definitely a much better price than it was up here at $486, but there's a lot of things that are driving Tesla stock down, which is Elon Musk, the negative sentiment around Elon Musk, the political issues going on, but most importantly, Tesla doing a lot of talking about robo-taxi, but not really delivering. They've done a lot of talk, but we haven't seen any certificates. We haven't seen robo-taxi in a vast majority of cities across the country. There hasn't been robo-taxi expansion and integration anywhere yet, and they are working towards getting this done, but investors want to see more action. So you couple that with tariff talk, the way the market sentiment is, and overall everything going on as a whole, including the negative sentiment on Elon Musk, then you will understand pretty much why the stock is headed down. But what I do want to show you is that right here on Tesla, there is a gap fill going all the way back. And you'll see that going all the way back here to December of 2020, there is a lot of interest between 190 and 275, or even as close as 290. This whole range right here. And that's where the current price is. It's sitting at 262, which is in the higher end of this very, very high interest area. And then when you come across and you look where we gap filled recently this past week, there is a gap here and a gap here. So it gapped down and gapped up, and this was back in October. Based on this, we saw that there was a gap between 217 and 242 and another gap from 255 to 277. And the rule is most of the time, not all the time, but most, and I do really mean most of the time, gaps get filled. Tesla came all the way down, filled this gap right here, continued to come down, filled all of these gaps, resisted, came up, it came back down a second time. You see this? It came up, came down, resisted, and came back up again, and now it's coming back down. And not only that, when we look at the daily chart, which is stronger than the 1 hour or the 4 hour, we can see the stock has made lower lows and lower highs all the way down, and we see there's a lot of support in this area right here, which arguably, if we look at the daily chart and move this line right about here, there's a wedge form. And so we can see that if we were to bring this line right here so that we were touching support here, here, right here, and right here, it would line up with this downtrend, which we've touched on the daily chart there, and we would move this just a little bit to here. We can see that this wedge is diverging down here right where the price has already touched, meaning there's a very strong possibility the stock will come down and bounce around here going into June and then bounce back up. But then again, this is not concrete. If we go over to the 4 hour chart, we'll look at this once again and see that somewhere between between now and May is likely the stock will come down and bounce and go up. Something similar to this, but this is a long-term investment. It's going to take potentially months and months and maybe even a year or more for most of this recovery to happen because of the sentiment on Tesla. We're going to go ahead and take a look at NVDA next. Stick around because after we look at NVIDIA, SOFI, Palantir, we're going to go ahead and take a look at the SPY, and then I'm going to explain to you guys what's really going on in dark data and what's going on with expectations in the market this week and what you should be buying and what you should be looking to take advantage of. So stick around for that. So the real issue with NVIDIA, or one of the issues, is that it's grown so rapidly over the years that it's really hard to keep that going. And then on top of that, tariff talk and the market selling off as well. But if we look at the last year, since June of 2024, we can see that the stock hasn't done a whole lot. And there's a lot of manipulation too that goes into the market. A lot. They have so much money on the sidelines to bring into the market. And you have to understand there's a lot of psychology in the market. They take advantage of investors just like you. You're constantly chasing the candle green that's going up. And as soon as you buy in, then the stock drops. You're losing money. And then as soon as you get out, the stock starts going back up again. You're constantly selling the bottom and buying the top. This is psychology. You want to buy and chase green candles, and you want to sell on the red when you have to see blood in the streets first before you buy. You want to buy the red selling candles when the stocks are hitting bottoms and sell the top. This is what I teach my students. This is very important to understand. When we look at NVIDIA, it hasn't done a whole lot since last summer. It peaked up really high around 152. It's been making lower highs and lower lows. And this has been consistent all the way down. And if we see there's a lot of support here with NVIDIA right around here and also right around here. We're going to change this to orange so we can see it better. And we can see yet again, there's a wedge forming. If you notice all of these wedges, when you look at them, we find support and we find a downtrend somewhere around April or May is where the downtrend and the support trend meet, the wedge. It's the same as it was on Tesla, meaning looking at these technical analysis, these graphs, and looking at the confluence and the exponential moving averages and just overall looking at these stocks, we can see that it's pointing towards a pretty big move near the end of April to beginning or middle of May, which is essentially going to line up with interest rate cuts because we're going to have another Fed meeting coming up on the third week of April, and they're going to announce if we're getting rate cuts. And if we do, it's likely to come in May or June, which lines up with this wedge. Now, I don't believe in coincidences at all, but that's what it's looking like. Largely manipulated, a lot of sell-offs going on. And when you see stuff like this and they all line up, big institutions are fearful. They're selling, manipulation. They're trying to get the market lower. A lot of money's getting ready to come in. And the Feds will bring the Fed put back most likely in April, creating a lot of positivity, and the markets will run. This right now, some stock buying opportunity, others not so much. Really just depends. Right now, NVIDIA, definitely a buying opportunity. Now, I do think this stock has potential and very likely to go down a little bit more. And we're going to talk about what's coming up on Monday and Tuesday after we get to these stocks. But just understand that Monday and Tuesday, NVIDIA is likely to go down a little bit more. And when we look at the chart, we can see that there's a lot of support at 100. And there's been some dipping down here, which was a liquidity grab through the gap filled previously on the daily chart all the way down to $95. But there's a lot of support at 100 to 101. So the chances of NVIDIA breaking 101 are very low. I say it'll probably and likely this week get down into the 101 to 105 range. And that may not happen, but it could. But I don't think it'll go much lower than that, meaning selling $100 puts going 2 to 3 weeks out seems like a fairly safe idea. But this is definitely a stock that at $100 is well worth it. Looking at SOFI, this is a no-brainer, especially considering the fact that this is pretty much one of the best bank stocks or fintech stocks you can buy. Robinhood is competing with them. I don't think Robinhood's going to be as competitive with SOFI per se. There's a lot that needs to be seen with Robinhood. SOFI is a well-established fintech and bank, and they have a banking charter. They have Galileo and Technisys, and a lot of other things going on, and Anthony Noto is a very good CEO. So it's going to be very hard to compete with them and Robinhood, in my opinion. They can do it, but I don't quite think it's going to be fundamentally the way you think it will. I don't think it's going to be a direct one-to-one comparison. When we look at this, yet again, we have a downtrend making lower lows, lower highs, but overall not as beat down as Tesla, but still, nonetheless, when we look at the previous high, we draw this line all the way down, and And we can see that it's kind of doing the same thing here. We're going to draw this line. We got to make sure it touches. 1, 2. It didn't quite touch here. So there's not enough volume to drive this stock up to hit this line or this downtrend resistance, which is right around 14.79. Let's go ahead and find the support now. And we can see on SOFI, there's a lot of support at the 1134 and again right here. So this line sitting right about here is where all of the support is on SOFI going back to October of 2024. When we look at this yet again, there's a wedge formation right here, okay? And it's lined up with May yet again. Every stock is lining up with May. Typically when stock bounce up and down like this, it'll come back up, something like this. And when this happens, it's either up or down. Most times it's up, especially considering the fact that the stock market is already down. So like I said, again, some stocks buying opportunity. SOFI at $11 is a fairly strong buying opportunity. Will it go lower? Good chance it could. It's more likely we're going to have a bit more of a dip come Monday and Tuesday, but you can always dollar cost average. I would be very safe. Wait to see how things play out Monday with the data that we're going to be having coming Tuesday. We're going to see how things play out on Monday with the stock market. So this is a great stock to get into, but potentially could go down further. I really would look play out on Monday, but I definitely think when the bell opens Monday, there's going to be some sell-off happening leading into Tuesday and leading into Wednesday, which is the PMI manufacturing data Tuesday and Donald Trump's tariff talk and the meeting that's coming up on Wednesday. And then we have PMI services data coming out right after that the following day. So we have lots of things going on this week, but realistically, I have a price target of 11 to 11.50 on SOFI this week. And if you can't get it that cheap, it doesn't dip that low on Monday, I think anywhere between 11.50 and 11.85 is still really good on SOFI. But we can see this wedge forming, but we are still below the 100-day. And you can see that right here. And we're still trending down. So I believe it's going to dip down into the low 11s before we have some recovery. And stick around. We're going to talk about what that recovery is going to be like on Tuesday and Wednesday. So looking at Palantir, this stock has taken a big beating over the past month and a half. And if we go ahead here and draw the same line like we did right here at the top candle and working our way down, going to clean up some of these drawings right here. There we go. Perfect. And if we draw this line all the way down so it's touching right there, and then we're going to look at a support, which is going to be right around here. We can see it touches 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right in here, there's a lot. And look at this wedge. I bet you it goes to the end of April, somewhere in the middle of May, and it does end of April going into the beginning of May. So really, it's the same scenario. This stock has just dropped below the 100-day. The 10, of course, is below the 20-day, and it's completely oversold. Again, I think Palantir, like the other stocks we've looked at, NVDA, Tesla, SOFI, I believe that Monday morning when the bell opens, stocks, including Palantir, are going to drop a little bit like this and sell off. And I think Palantir is going to dip into the high 70s. We're going to get our data on Tuesday, and we're going to have the meeting on tariffs Wednesday, and then we're going to have more data on PMI later on in the week. And I think that's going to eventually, by the end of the week, start driving stocks up. We're going to be talking about that momentarily. But right now, I think that we're going to see a little bit more of a dip on Palantir. And I think that we have to really wait to see what happens on Monday to see how everything plays out in the market. Like I said, there's going to be some sell-off in the morning and some more selling off in the afternoon, I believe. And then Tuesday morning, when we get data, that will be the time to make the decision. Monday, we have to understand what's happening before the opening bell, which is why we're here right now, to give you guys the best insight possible so you know what to expect Monday morning. Expect the unexpected, so to speak. So we've looked at Palantir, NVIDIA, Tesla, SOFI, and just understand that the volume on all of these stocks is very low over the past couple of days. The average volume is 113 million. And when we look at volume, I'm going to actually turn volume on. I'm going to go in. I don't really look at it on these charts. I have a separate chart for it, but I want you guys to understand what's actually happening with volume here. So I'm going to open up my indicators and I am going to add volume. And I want you guys to see that volume has really tapered off. Look at all this positive volume over here. See, all the way up here. Look at the volume, big peaks of volume. And then we get over to this past week and you get to see how low the volume is right here. Low volume and mostly red and bearish. So there's a lot of that going on, obviously, and we're going to discuss that. We're going to discuss it. Let's take a look at SPY. Now, again, SPY has had a lot of selling, a lot, just like every other stock. The whole market's been selling off. Understand that long term, 1 to 2 years or 3 years, SPY is better than almost any stock, especially 5 to 10 years or more. And the SPY is an ETF. So if companies go bankrupt, they're not doing well, it's going to get rebalanced and good companies added in. So outside of an apocalypse or the world ending where money won't really matter anymore, in fact, it's not going to matter at all, the SPY is always going to work its way up. And I've been saying this pretty much every video I ever talk about SPY. I explain to you guys the SPY is always trending up, trending up. It has pullbacks, sometimes major pullbacks, and sometimes we have semi-bearish markets that could last 6 months, and then it goes up again. But historically, SPY always goes up. As an ETF, they're always going to funnel bad stocks out and shove good ones in. So essentially, aside from an apocalypse, the SPY is always going up. So 1 to 3 years, good investment, really good investment. 3 to 5 years, even better, and 5 to 10, it's practically bulletproof outside of an apocalypse. But I'm not trying to say that word too many times, but I'm just explaining to you guys how strong the SPY is. So when we look at the SPY, we can see that it's got a big downtrend happening, just like every other stock, but there's a lot, and I mean a lot of support right here. We can see it's touching here. It was a ceiling, it was resistance, it broke through, and now it's become support right around the 562 range. And we're just below that right now. So if we come over here, you'll see that this is right here is where I'm going to zoom in and actually just fix this so it's even more accurate right there. This is the floor and the ceiling crossover right there. 561, 560. Okay. So what we're going to do is come over here. We're going to look at the downtrend, and it's kind of oddly enough recovered and come up, and then now it's coming back down again. So what we're going to do is we're going to draw this downtrend line like we've been doing, and then we're going to bring this down till it touches right there. And we now have a wedge very similar to the other stocks, and we can see yet again, end of April, beginning of May is where this wedge is. And the bottom right here of 550 truly seems like the floor. We have a lot of resistance that's going to be in this area. So between 540 and 550, there's a lot of support. There's going to be a lot of buying in that range. So I think Monday morning, like every other stock, we're going to see a pre-bell or pre-market open sell-off between 4 a.m. and 9:30 a.m. There's going to be some selling, and I could dip as low as 540 or 545. Maybe it'll just support where it's at right now, but it is possible to break through. Personally, I think 550, at least a $5 drop is coming Monday morning. So this wedge right here, end of April, beginning of May, just like every other stock, lines up perfectly, coming just shortly after the next Fed meet, the next potential Fed put for interest rate cuts. Coincidence? I think not. I think this is what we're looking at. I called very similar price action like this and patterns last summer, right before Palantir got added to the S&P index, and the stocks went up in August. So I've done this a couple of times, and these patterns and these indicators have pretty much shown me very similar behaviors in the past. And when you couple that with my psychology knowledge and how things work with psychology in the market, this is what I truly believe is happening. We have a sell-off on Monday coming in the morning and afternoon, maybe some in Tuesday morning, and then when we get data, then we have the potential to go up and drive forward, but there has not been enough recovery yet. However, buying the SPY at 550 or 555, not such a bad idea after all, but let's just wait, sit on our hands when the bell opens, and let's see price action. If it dips, let's see where the dip goes and where the support is, and once we see the turnaround and some candles forming and the stock starting to move up, and we see data on Tuesday, it gives us that opportunity to get closer to the bottom. You have to understand, there's a lot of investors and big hedge funds, big institutions that are really not looking to do much right now with the uncertainties, tariff talk, the big money sidelines, interest rate cuts up in the air, inflation data, manufacturing data, services data, year-over-year spending, month-over-month spending, unemployment, jobs added, jobless claims, housing starts, the housing market. There's a lot. Insurance, auto, there's all different types of data and analytics to look at for the market. So you have to understand all of these to understand what's going on. And right now, a lot of investors around the world, a lot of foreign investors as well, are not looking to jump into the market right now because there's uncertainty. We are waiting. They are waiting to see what's happening. Most investors are just looking for clear indication of what to expect on Wednesday. Wednesday, where we're going, what is going to happen. We know tariff talks happening. We know there's going to be tariffs, but once Trump speaks on tariffs on Wednesday and everything is set in action, everyone knows exactly what's going on and we have a direction, that's when the markets will react. We've already overly sold off. We've already priced in all of this fear and we've already priced in the tariffs. Right now, there's just no volume and no buying volume, so to speak, to bring the markets up because nobody is investing until Trump talks and we have certainty and we have direction. Yes, we know there's tariffs. If the tariffs are the same as what we expected, we're waiting for him to speak so we can get more clarity and more concrete direction on that. And what I mean is once we see manufacturing data come out on Tuesday, if we at least meet or beat, it's likely the markets will start rallying on Tuesday, but not too much. I don't believe there's going to be too much of a rally. And if there is, there could be a sell-off because Wednesday is the big deal. It really is when Trump talks. So I believe if manufacturing data is good on Tuesday and Trump doesn't say anything extra or exaggerative or anything unexpected and we get some clarity on Wednesday, the markets are going to go up. This is really the bottom. This is likely the bottom and where stocks are going to go up. And Tom Lee said something very similar. Let's take a listen to what Tom Lee had to say.
Market sliding in the final hour today. BlackRock's Rick Rieder saying last hour that the animal spirits that helped drive the market higher at the end of 2024 are part of what's hurting stocks now. Take a listen.
We came in the beginning of this year. It was all about animal spirits, and it seems like it's moved to animals in hibernation from animal spirits, and that can translate into a bit slower growth for a couple of quarters.
So that was interesting to me, Tom Lee, as I bring you into this conversation, the head of research at Fundstrat and a CNBC contributor, because he's talking about animals in hibernation, not animals dying. It goes back to this idea of uncertainty around things like trade and tariff policy and the fact that as of right now, in the midst of that uncertainty, perhaps companies are sitting on their hands before they start to make any kind of future investments. So if that's the situation, how much does getting some sort of certainty now frame the investment thesis for how you position yourself moving forward?
I think that's exactly what's happening now, Morgan. First, in 2018, which Michael was talking about, the spike in the VIX or the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery. I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Rieder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
So what would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this balance, that's a bull case for Mag 7 to be the group to own in the next few months.
So you like Mag 7, even though we've been talking about things like cash burn at Microsoft and all of the CapEx investments and worries about a bubble in AI spending?
Yeah, I mean, in some ways, it's been a self-amplifying downturn, right? Because we've been worried about AI as a bubble and the CoreWeave IPO at a time when we have tariff uncertainty. So I could see it as a very convenient reason why investors have actually avoided Mag 7, and it's been the group that kind of really led the downturn. But it is a cyclical trade, too, because I think once investor confidence returns and they're going to start to buy stocks, the Mag 7 are not only the best companies, but they're the most liquid, and they've really derated. On top of that, I think, financials and industrials look attractive as well.
What do you think it takes to see that reversal in sentiment? And we talk so much about when sentiment gets negative enough, it becomes a contrarian buy signal. So if we're there now, then what are going to be the catalysts to start to shift that confidence again?
Well, I think the focus right now is on April 2. So I think the market has a lot of myopia around getting tariffs and tariff clarity. But we know that tariffs are just one part of the administration's goal. There is reducing regulatory cost, and then there is extending tax cuts. I think as investors start to think about that for the rest of the year, that gets them quite excited. And And of course, I think we have a lot of what I would call spooled energy. Investors can't stay this bearish. The VIX can't stay this anxious. There is a lot of firepower and dry powder on the sidelines. And I think businesses can't stay cautious forever. I mean, once they know the ground rules, I think they're going to actually start making decisions.
So you heard what Tom Lee said. He thinks that this Tuesday and this Wednesday is essentially a turning point, a pivotal turning point in the market. It's already overly sold off, so much fear priced in. Everybody's sitting on their hands and selling, and everything is red, blood red everywhere, blood in the streets. It's a disaster. If data comes back on Tuesday for manufacturing good, nothing gets added to the Trump tariffs. That's negative, and it stays what we expect, slightly better. And data is good on services PMI this week. April 2nd could be the turning point of the stock market turning around and going up. And essentially, like he said, it's really not likely the stocks are going to stay selling off and stay this low. Markets can't continue to sell like this. The VIX can't continue to stay this volatile and this high for this long. It can't just keep happening. It's not going to just keep selling off like this. There's so many opportunities. He explained this. This Monday is a turning point. There's going to be some selling on Monday, but I believe that things somewhere between Monday morning and Tuesday afternoon, there's going to be a turning point, and it's going to be right around the data on PMI manufacturing. Now, the markets can do some strange things, and Monday morning, there is that looming possibility that investors could start buying because we're so far on the bottom already. We are 6 feet under the ocean floor, so we're already on the bottom. So it would not surprise me if Monday morning, although we do expect a sell-off because PMI manufacturing data is coming in on Tuesday, typically we see sell-offs the day of, the morning of, and the day before. But we've already had so much sell-offs going on that it's actually just as likely, or just about as likely, that the stock market could start rallying Monday and then plateau and sell off a bit Monday night and Tuesday morning. And then we get data, and if it's good, then run again. In a market like this that's overly sold off, beaten down on the ocean floor, it's likely to rally sooner rather than later. Hope you guys enjoyed this video. If you guys would like to learn all of the strategies that I have to offer and learn even more than you did in this video, and you like the way I explain things, I would love to help you retire. It's what drives me every single day. I want to help others achieve financial freedom just like me, so you can do the things you want to do. You guys can sign up at investorcorey.com. Links in the information box below. I offer a full training course, Discord to surround yourself with like-minded people just like you and I. And I offer full one-on-one coaching, mastermind, and boot camp classes to help you accelerate no matter what your education level is in the market. You can see the students that I have in my Discord and their profits on the screen. I would love to make this your success story. InvestorCorey.com. Click on training, watch the video, and book a call with my team and I so that I can help you achieve your goals. I'll see you guys on the next one. Take care of yourselves, fam.